Our next speaker is Mr. Andrew Grove, who is the Managing Director for CHESA Resources. Mr. Andrew is a geologist who has over 30 years technical, commercial, and financial experience in the global resource industry, including 14 years with Macquarie Bank's mining finance team. Andrew has significant operational and management experience across all phases of the mining industry, from exploration through development and operations over a broad range of commodities and geographies, including extensive African experience. He has a geology degree from the West Australian School of Mines and a master's degree in mineral and energy economics. Ladies and gentlemen, shall we please welcome Mr. Grove to the stage?
Okay, thank you for the introduction again and for the opportunity to present CHESA to the Africa Down Under conference. I'll read the disclaimer. So CHESA is essentially a Senegal-focused gold company. We've made a discovery in mid-2020 on our BASELOAD project on the eastern side of Senegal, essentially on the Senegal-Mali Shear Zone rocks, which are the host of Loulou, Gonkoro, Fakolo, all of which are sort of just across the border in Mali. We've wrapped a scoping study around that initial discovery, which shows a very simple, high-value project development is possible on the site. We're growing the resource and we're putting ourselves into position to build the next mine in Senegal. The snapshot of the company, market capitalisation of $50 million, we're all undervalued. Takes a bit of time to get market acceptance on the ASX for Australian or African gold projects. But importantly, the board's run ably by Mark Connolly, who's West African, been around West Africa for a long time, built and sold a number of projects, and was involved in the Toro Gold's development of the Mako Gold project, which now rests within Resolute. And we're ably managed in country by Gareth O'Donovan, our exploration manager, and Boubacar Tierra, who was also involved in the licensing and approvals of the Mako project. So today's talk will sort of highlight four points. We've got a baseline of resources. Importantly, that's going to grow to, we believe we'll grow that to beyond 1 million ounces this year. The development metrics, as proven by our scoping study, show a very high value, technically simple, robust project, but that's going to the value of which is going to improve significantly as we add more ounces. And we're on that road to making an investment decision and developing the next mine. Let's have a look at where we are. The little orange tenement is our BASELOAD project. Most of our work to date has been focused on that project. Mauricio and Bondala are recently granted tenements, which we've done no work, and we'll start doing some regional exploration on those this next field season later in the year. But importantly, the discovery at BASELOAD is, it's sort of smaller scale at the moment. It has a lot of metrics. It's shallow, good metallurgy, and it's in a developing, highly prospective region on the wedge of Senegal-Mali Shear Zone rocks that sit on the Senegal side. It's historically, exploration didn't show any prospectivity in that area because there's a laterite cover and the traditional soils and termite samplings didn't work. When CHESA moved into the country in 2017, undertook some auger sampling, showed extensive gold anomalism below the laterite. Subsequently, BARRICK, who have got the tenements adjacent to us, extended that auger sampling, and it's essentially a 15 by 15 kilometre anomalous geochem footprint, 5 k's away from Loulou and Gonkoro, and hasn't had a drill hole until 3 years ago. And since then, we've made a number of discoveries. We're finding new mineralisation. We've got a new discovery made late last year at KARAKARA, about 1.5 kilometres south of our existing resources. We're going through and testing a number of anomalies which are delivering really good, interesting results. So we think there's a clear pathway to grow this resource base to plus 1 million ounces and beyond over time. It's one of those projects where incrementally we'll add ounces keep adding ounces over time. But let's have a look at where we're sitting in the current resource base. Area A and D, they're adjacent to each other. Area D is this supergene blanket that sits at 10 metres below the surface, 20 to 40 metres, 3 to 5 grams per tonne, and that'll drive the really strong early economics, the strip ratio in that pit's sort of sub 2 grams per tonne. Metallurgy's all seems to be pretty good. The continuity of the grades are very good, as we can see. This is the plus 2 gram blocks. The high grade is in 2 large areas, in area A and D, and form contiguous high grade zones, which sort of lead to a low resource risk, essentially drilled at by 25 by 25, so circa 70% is indicated, and most of that converts into a mining inventory under the scoping study. And we've delivered these ounces at sort of an economical $11 an ounce, but it's growing, and we'll talk about where the growth's going to come from. In terms of scoping study, we put the scoping study out in March this year. Fairly technically simple, free milling gold project, 2 million tonnes per annum, low strip ratio, 2.8 strip ratio over life of mine, sub 2 on the first 2 years. Metallurgy looks pretty good. We're doing a lot more extensive metallurgy now, but sort of 94% in the study, with this test work sort of indicating 96. But we've started the feasibility study, and we'll firm up all these technical metrics as we go along. But it's going to grow from here. The economics that wrap out from these physical metrics is, an NPV of Aussie 420 at 1800. At 1600, that's sort of 320 million, market cap 50, remember that. IRRs are very strong, payback's exceptionally strong. That oxide supergene pit pays back within 18 months at any gold price. So in terms of future fundability, really early, strong, quick cash flow will lead to a fairly good debt equity ratio when we get to that point of funding it. Capital costs of $160 million US. Where the growth is, this is our new discovery. We made that, as I said, late last year. KARAKARA, we've just got, these are the release results from our last drill program. We've got all the final results now. We can start resource estimation on this project. We've defined mineralisation over 250 metres. These pods, these high-grade zones in the area seem to be that sort of 200, 300 metre long horizontal type zones. It's relatively near surface. It's open to the northeast particularly. Really strong grades. We think that this will deliver significantly to our resource inventory, but also should have a lower strip ratio than the area A pit, and probably a slightly higher grade than we're currently seeing in a resource. So it should uplift that value that we see in a future mine development. We're also, in our latest rate of drilling, we've pushed the mineralisation to the west of area D, so that should add there as well. And some of our exploration results and some of the other prospects, particularly Western Splay, have shown really strong grade. It's quite complicated. It's complicated everywhere, but it's complicated there. Strong, narrow, high-grade mineralisation near surface. There's artisanal activity over top of that. That's a target to be better defined in the next drill season. Further to the south at Kasasoko, there's an artisanal pit area where we did a number of rock chips, and average grade was sort of 3 to 4 grams per tonne. Did a couple of diamond holes under that. We've got some narrower, lower grade mineralisation, but that's not done. It's work in progress. The whole area is, complicated. There's no strong structural element you can follow. What we've done to date is find the near surface mineralisation as indicated by the geochemistry. What we haven't done, and what Barrick haven't done to the east of us, is that understand the system well enough to target effectively repeats at depth, but there must be mineralisation at depth. And you can see the anomalies, the geochem anomalies we have on our tenement. A lot of those don't have any drilling or have very, very little drilling on them. So we've delivered 780,000 ounces within a couple of years of really doing the exploration, and we'll deliver 1 million this year, and we'll keep growing that over time. But you can see to the east of that tenement, little orange circles, Barrick's KB West prospect. That's their most advanced project. They're actively exploring that tenement, which is to the east of us, to the border of Mali, and they're delivering a lot of results as well. I don't think they've found the big one yet, but they're certainly delivering lots and lots of hits on mineralisation. So it's an evolving gold camp. There'll be multi-million ounces in this region. The jury's out to whether it's a Tier 1 Barrick scale project or multiple small high-grade projects that suit a Chesser-sized company. But in any respect, we're going to put ourselves in the middle of that by developing our project in the middle of it, or forcing Barrick's hand to see if they don't want to do that, don't want us to do that. Sort of a timeline where feasibility studies are well underway, ESI work's well underway. We've done our dry season survey, baseline survey, wet season survey September. So the plan is to have the ESIA DFS completed mid-next year, and at that point we can officially go to the government and start the licensing process. Obviously we're talking to the government on a continual basis now on our activities and what we want to do and what we want to do to deliver, what we need to do to deliver on these promises and what they need to deliver. So hopefully that sort of 12 months I've allocated for licensing is shorter, but it does take time, and there is a mining convention to negotiate in the interim. So 2 years' time we should be in a position where we can make a final financial investment for developing this project, and it gives us time to go through and get debt funding and whatnot for that development. This is a quick snapshot of what Barrick's done around us. This is their publicly released information. They've put the exploration results every quarter for the last couple of years. The white image is Mali, so Gonkotto is 7 k's away, and that north-south anomaly runs straight into Lulu. You can see why they're very excited about it. It's the same rock type, same alteration systems, massive geochem footprint, and it hasn't been drilled until the last 2 years. So they're pretty keen on the probability of that hosting a tier 1 deposit. But what we've seen it delivering to date is lots of smaller high-grade deposits, which at the moment looks like more of a Chesser scale consolidation, but we won't know, and we'll see what happens with their exploration. But we have a good relationship with our neighbours, and we share information and data, and so we're both learning on this mineralised system and how better to target at depth. In terms of valuation, the big gap between the market cap and the NPV of the scoping study, that's going to materially increase as we add ounces to it. In terms of a recent metric which is ongoing is Oklo being bought out by B2 Gold. On that, they have similar resource metrics. They're a bit further behind on the development scenario, but still there's a big gap between us and that valuation. So really, in summary, we've got a project. It's getting bigger. It's simple and it's executable. It's high value, and that's going to get better as we add ounces to it. And we're on that road to position ourselves to develop the next project in Senegal, and it should be pretty exciting. Thank you.
Right on time.
That's it. Practice is great.